Today is Wednesday, October the 3rd, 2012. My name is Michael Wright, and this is the midweek webinar. Just before continuing further recording, please do pause the video and read the risk disclaimer. Okay, guys, let's jump right into the swing of things. Let's actually look at the recent trades. I believe everything is updated on the back end. Let me just sign in. So in terms of the trading log, we also have it here, fourth quarter, but up a pretty good amount. Believe just about 200 pips. Again, we don't really trade for the week. We don't trade for the day, but just happens that we're up a good amount in the first half of the week. So again, we're gonna trade like that throughout the rest of the month, right? So may get a little still keeping our regular 2 to 3 trades per day, our 40 pip stops, etc. But the only difference will probably be that we look for extend gains where we see fit, because we don't have to collect profits so fast to get up a good amount. Okay, but key trades that this week, dollar CAD. Okay, that was that break even. Worth noting for this Euro CAD long. Okay, though I closed it out for 22 pips, it never stopped me out. So if we kept it open, it would have actually been in the profit. Okay, but big trades were the Euro Aussie long. Good catch by Liam. Got closed out for average was plus 124. The quarters were 2600, 168, and 204, and then you take the average. Okay, I'm pretty aware that a lot of, if you guys are actually members of other sites as well, what I've seen in the past, again before starting this website, I did scope out competitors. You will actually see some people add up 204, 168, 126. That is 110% incorrect, because you need the average. It's still one position. Okay, these are not all different positions. So just something worth noting. The reasons why we do this is that, you know what, you never, like, you have an ideal target level. Okay, the keyword is ideal. Again, we are in a market that is predictable to a point, but it's its own monster. So we scale back up out of positions. Okay, and then where we see fit, we add on, and etc. So anyway, that was a great. Another good one was the short Aussie CAD. Average was plus 82. We are still in this short Kiwi dollar. Booked a quarter for plus 70. Booked the half for plus 90. All right, and we are still in the last half. We'll talk about that shortly. And the other trade we are now in is a long pound dollar. Dollar CAD, I took off the table a bit early from 25, and I'll look to get short on a close of support, or just stay pat. All right, but we'll focus on the Kiwi dollar and the pound dollar first, and I will get to the dollar CAD question shortly after. All right. One thing to notice too is the trading log. Tonight we are planning to introduce a trading plan, right? So for those of you guys who like to follow us, you can still do. We'll post our performance alongside of it. Post a trading plan. I spoke about it briefly last week, but Chris is actually going to go ahead and get more in depth with the trading plan a bit tonight. Show you guys what he's looking at. But according to the trading plan, it's actually up on 80. Now the trading plan, all that it is just 30 pips. It's a one-to-one risk to reward, 30 pip stop, 30 pip target, and then you'll see how this plays out. So that EuroCAD trade, that would have actually been plus 30. Kiwi dollar would have been minus 30 on that short, even the profits now, because again, stops on the original position were minus 50. All right, so just something worth noting as we get there later. But again, focus first on Kiwi dollar and pound dollar, and we'll get to dollar CAD. So Kiwi dollar looks to holding around that you could call this almost a triple bottom. All right. So it looks to be holding around that triple bottom. So I'm not ruling out a bounce. So that's why I took off a bit off of the table. But from an Ichimoku standpoint, it's still a short, and I will look to get short or add back onto shorts at higher levels. Not only getting in on a full position, but also adding on to the last quarter. All right, the last quarter stops are 80 to 69, locking in 20 pips. I do not plan on moving those stops because any bounce back I'm selling. And hey, if I get stopped out, so be it. My average will still be pretty good in the money. Okay. But still, as we cross back below the Ichimoku cloud, any rallies are looked at as a selling opportunity. So, but I took off a lot off the table as we come across here. Also, you could see horizontal support, and you see how it has up from the previous two bounces, and as of late looks to appear to have bounced. I will not be taking this long. I don't like that long. Rather, we a long pound dollar. That's better. But obviously, from a correlation standpoint, this is all the same. All right. Well, ideally, pound dollar usually moves a little bit more with euro dollar. Um, obviously, that whole eurozone sort of affiliation in the same region. All right, but in terms of the pound dollar, I still like this long setup. Got along a little bit higher, 79, but we are still holding this 38.2% Fibonacci retracement. According to my count, this is 1, 2 with the high wave. Fourth waves, I continuously say this a lot. Fourth waves come in around that 38.2% Fibonacci retracement. We are also just around that ascending trend line. So as long as we hold above here, then longs are still preferred. But hey, if we do close below, then may get some downside. But this long setup holds well. Ideally, this looks for new highs. Reason why I'm not looking for new highs is because Kiwi dollar, the maximum I see on Kiwi is about a 60 pip advance. So if it happens that Kiwi just remains weak while pound dollar rallies, then possibly a pound Kiwi trade setup could bode well for Shire. Okay, so I will be looking at this pair very cleanly. All right, and you see this here, a nice descending trend line. So a possible 4-hour break and close above this area would bode well for long positions. And you compare that to, let's say, maybe Euro Kiwi already broke out, so worth noting for that pair. But now you compare that to, let's say, Euro Aussie, right? You compare that to a pound Aussie trade. These trades have accelerated. So pound Kiwi and Euro Kiwi are we could say sort of lagging, right? And we do this a lot in terms of the team here at Right Time Capital Group. We believe if we miss on a trade setup, we will look for its counterpart as a sort of gauge and sort of timing that, because when it starts peeling away, that stop becomes too wide. It becomes worthless to even watch it. A trade that did that was the EuroCAD. Chris, Liam, and I were actually speaking about this trade last night. Indeed, just so you guys know, we do have a team room, and it's just really us that we talk about different trades before we actually do take it. So I think we got a couple questions in the past on whether we all look at correlations. Well, we don't. I do, but correlation based, if one needs the other, then we just overlook it and just watch price action to see how that plays out. But at either case, though, that was one we were talking about last night. Still looking for new highs, but it was just that risk was just a little bit too large. But this pullback could have bowled well. But in any case, though, pound Kiwi is one that I am looking for in the near term, and that's mainly because Kiwi dollar still looks to be weak, while pound dollar could indeed head to new highs. Okay. Does anybody have any questions with that? Okay, anybody have any questions? Everybody with me so far? Went over about 3 or 4 pairs, but does it sense so far? Okay, perfect. Steve says yes. All right. Again, I really like the interaction with you guys, so don't feel shy. If it doesn't make sense, then say something. Again, this is a service that you're paying for, so I'll be happy to go back and help you to explain it further. Okay. But pound kiwis on the radar. I'm actually gonna go ahead and I'll type that um, into both our team room um, and also the chat room on the site. Okay, so a couple things worth noting for that. Now, a question that we had here from earlier. Let me just scroll in this chat was, I believe, the dollar CAD. Okay, now let's chat about the dollar CAD. Indeed, we took this long. I didn't front run it. Basically, sorry, just writing, stalking pound kiwi in the on-site chat room. But the breakout I took at 3. Believe it was maybe around 2:30, 3 o'clock in the morning when we took this trade. But it was this candle right here that allowed me to take the shade, and we captured this whole spike higher. Okay, so a little bit risky, but again, all the dollar pairs were already moving, so it was a little bit of a front run. But once I actually went ahead and I reevaluated it, I saw this clear resistance area from the 103.50 highs to come right against resistance. Now seeing support at 98.40 and also 98.20 respectively. So two big resistance levels to watch. All right. But Steve says that level on dollar CAD chart also used to be the 38% fib from the rally of last year. Been support a few times over the months gone by. All right. Yeah. So big level. Um, it is possible that dollar CAD does collapse and hang lower, but on the other hand, you see crude oil. I'll go back to that chart soon. Dollar CAD could indeed still have upside, but you see the 78.6 fib how it's holding pretty well. So a setback, and this even makes sense in terms of looking the Kiwi as a selling opportunity on any bounce, on any bounce to the upside, because any bounce here is still buying as the 78.6% Fibonacci retracement holds, cleaning this out to be what appears to be a Y wave. Okay. We found this gap, so we could take that off. But any break or a dirty close below 96.70 will expose the lows at 94 for a double bottom, in my opinion. Okay, so a couple things to note there, Steve. We had another question, I believe. Um, let's see. Sorry, just have to scroll back a little bit. Abdul says, "Is it pound dollar head and shoulders and should lease down 160, 160.20 through 160.50 before going higher again?" So let's go back to pound dollar. Um, the pound dollar head and shoulders. Okay, I see exactly what you're looking at. Let's see how this plays out. All right. I'm not even gonna. I'm just gonna look at it. Actually, let's pull up a clean chart. So 'cause I already have a bias, and sometimes just on my standpoint, when I already have one, I do look at clean charts and see how can I be wrong, etc. But let's do that right now. Okay. And Abdul, I believe you're talking about the 4 hour, right? The same chart I'm looking at. All right. So off a clean chart. All right. Here goes the head. Here goes the left shoulder. Here goes the right shoulder. Now the neckline. See the neckline will be around here. So the first false break, you can even say this is the right shoulder. So this is a false break. This is the real break. But 163 neckline, we can say 161.90. So 110 pips. Breakout here, 110 pips, 160, 161.90. So it's still the same thing. So if you're looking at that, then the head and shoulders move is over already. It's only 110 pips. We already completed that. Okay. 161.90, 160.90, 160.80. So it's complete just around where we went long. Okay. Just my point of view, there's no, well, at least from my standpoint, there's no other way to see this head and shoulders. Head, shoulder, shoulder, head to neckline is 110, breakout 110. So it should be ideal. So just how I'm looking at it, I don't see it going down that far off of that measured move. It says thoughts on dollar yen have been long since 77.74. I actually really like that long. When I was looking at it, I believe there was some big orders from some banks when I was possibly looking to get long. What didn't? Oh, you know what it was? It was just I didn't want to get long at the fib. But it was the fib. I was looking for a pullback at the trend line, but the only reason I had was the Fibonacci retracement. This breakout here is spiked up. There was no way I was getting in that. So trade resistance 78.80, but you look at a correlation base, we should begin pulling back in the dollar if everything else is correct. But you see here this green line. This was when basically we're trading around here. So obviously that view was correct. Next retracement area. So we are holding just around a 61.8 fib in a full position. If I was in that position, I would take off something off the table, just because everything else is at clear resistance, and so is dollar yen at that 61.8 fib. But pressure still could be to the upside. But I definitely, if I was in that position, I'll take something off the table and trail stops. I think you said you were long for 77.74, so that was exactly that fib retracement. So either you're looking at my chart or you saw that fib too. But good call. Okay. And you're up a good amount, so never feel ashamed of taking profits off. So something to note. Steven says, do I think the employment number will change trend? I don't look at any fundamental, Steven. Not sure if you've been following me for a while, or if you're new, but I don't look at any fundamentals. Just because basically you get caught in that moment. You don't have an outlook, you don't have a plan. You're just caught, well, at least from when I saw basically a lot of traders, they all are caught in a certain number. Next thing you know, or you have volatility back and forth. It shakes you out because obviously you're as confused as the market with the volatility. Next thing you know, it has moved nowhere and lost money because you got caught too much in the moment. So I don't even know employment. Honestly, I don't know what employment data you're talking about. If it's NFPs, Australian, I have no idea. My team keeps that away from me too. So, but in terms of the trend, it depends what trend you're looking at. You can look at a trend on a 4-hour, daily, or weekly. For me, the trend is still, for euro and pound, the trend is still to the upside. For Aussie and Kiwi, it's to the downside. That's on a 4-hour time basis. On a daily time basis, one thing speculation-wise that even so, Steven, you're not supposed to tell me. You're not supposed to tell me. It's funny, you know why? Because even sometimes in the chat room on the site, whenever I see fundamentals, I just get off of it real quick. I just prefer not to know about it. The only thing I care about is price action. That's just me. But you know what? If NFPs is going to put Kiwi higher from a time speculation, we are only in 1, 2, 3, 4. So today being Thursday, because 5 o'clock, obviously, today is only the 5th day. So any pop higher is still to sell because we need at least a week and a half worth of a move, right? So this was a recent high. So anything back is a selling. So that's why I continue to say it's still a sell, but that's on a 4-hour time basis. You see here on the daily time basis, the trend is to the upside. In terms of trend really focus into the downside, we need to break 81. Now, Steven, just I'm not picking on you. I'm just something to note. Now you see here, right? Whereas I have a sort of trading plan. If I get caught on NFPs, then what? Right? What am I doing? I'm not looking at daily. I'm not looking at 4 hour. I will get down and probably look at an hourly chart, 30 minutes or 15 minutes. All right. So a couple of things to note there. Um, so we'll see how that plays out. Okay. But does that make sense, Steven? Okay. Anybody else have any other questions for me? If not, then I'll be happy to go through a couple other pairs. I'm not. I think, and I think somebody earlier said pound dollar 160.20 or 160.02. In that case, in case you are right, then that is the support pivot. That's the next pivot area. Again, there's no way to be right 100% of the time. That's why we trade 1%. But at the end of the day, though, our goal is to really extend those gains. I have a 30 pip stop. If I get stopped out, I'm not losing sleep over it. Okay, there's way too many possibilities in the market, and again, our method works. We're showing 9 months worth of our method, so something else to keep note of. All right, if there's no more questions, let me go ahead and let me look at some other pairs. Again, I really do indeed like pound kiwi, but again, that's off the basis of pound dollar and kiwi dollar really holding true to themselves. Um, aside from that, we can look at. Actually, I haven't looked at the dollar index in a while. Let's do that now. Even here, you see a nice breakout to the upside. This also points to further dollar gains. See, nothing has changed. We broke out, pulled back. Nice trend line off the base. Okay. Let's look at the daily time frame. Again, there's no count on here because I just haven't looked at it in a while. Um, I prefer dollar Singapore dollar over the dollar index. As weird as it sounds, dollar Singapore dollar is clearer than the dollar index itself. But here, if the dollar index, now here's a flag, right? Sorry, the dollar Singapore dollar. So here's a nice clean flag. If we break out to the downside, I'll take this short and I'll aim for 120.10. If this does break out, then this is actually going to confirm the pound dollar. Okay. Um, so this is a good setup as well. You can see how the last flag played out. All right, that last flag being from August. All right, August until September. Then we broke out a nice focus to the downside, and then we see the same thing here. False breakout first, nice pop higher. Again, this shook out early shorts. This break here shook out some, unless you're holding it, but I can imagine somebody holding it for that long of a stop. But again, that next break I will most likely take to open up new lows, 121.50. Again, I'll speak to the team about that trade. But then 121.50 first, and then 120.10 for a double bottom, and also to meet that 261.8% Fibonacci extension. Again, there's no divergence just yet, as the momentum broke that trend line. So now we begin to start looking for that area. But this here confirms the pound dollar move. Okay. Also worth noting, let's look at Aussie dollar, right? Because compared to its counterparts, Aussie dollar has really made some large moves. Focus though, for me, is still to the upside. You see, Steven, so here, what's the trend to you? Because if you're sitting on an hour, obviously the trend is to the downside. Um, Again, I'm just really beating the issue down of really focusing on time frames, okay? But for the Aussie dollar, it is holding psychological support at 102, all right? And as long as this bottom at 107.5 holds, we can't rule out a push to the upside, okay? So we really can't rule out this shooting higher, squeezing a lot of shorts who are looking for parity or whatever else, whatever reason. But here, this AB, this 38.2% still held, and now we're looking for another AB with a C wave still on thing. I still like 108 and possibly 110, but indeed that is a major, major move to the upside. So first, let's look for 105, or let's look for a bounce towards 103.45 on a full retest. That retest may be a short first for a couple point drop before we turn higher. All right. So let's see how that plays out from an Ichimoku standpoint. From an Ichimoku standpoint on the Aussie dollar, let's look at the daily time frame. We have indeed broke this Ichimoku cloud. This is the first time since June. So actually, this takes the attention away from the highs. All right. Rule of thumb, and this is the rule Chris has. If it's below, only look for shorts. If it's above, only look for longs. All right. So again, we do pretty well matching up different styles to get a certain outlook. So here, this actually, I guess, backs that point of anywhere near 103.45 is a short. Also, we see the Tenkin crossing below the Kijun to really validate that short bias. The future cloud is thinning, but it is turning bearish. Tenkin is at 103.40, and again, 103.40 from a LE wave standpoint, just say breakout trendline standpoint, is also a full retest. So a lot of reasons to get short at higher levels, and that still backs my whole viewpoint of Kiwi dollar. Kiwi dollar from an Ichimoku standpoint, all right, you say the Tenkin is pretty far away, but next support still comes in at 81. Next support still comes in at 81.30. All right, so we'll see how that trade plans out as well. Okay. Um, Chris's video. He recorded an Ichimoku video yesterday, so if the Ichimoku is something that you do like, please feel free to go ahead and check out that video. A nice setup, actually, Liam is writing right now is the Aussie Kiwi. Okay, let me go ahead and let me pull that up for you guys. Okay, so this is Liam's Aussie Kiwi setup. So trendline resistance for a top. Next resistance, a big area, actually something that I picked up actually from Liam is using these horizontal support areas, because when they breach, that's really big. Aussie Kiwi has been beaten down. Place an emphasis on beaten. Okay, so any bounce, you can't rule out any bounce. Okay. So that's the 4-hour setup, and then also here's 1 hour. So a nice flag really developing to even further break down any sort of early coming longs, right? Because at least from my standpoint, right, I like to really fade moves. I break out sometimes, but I'm more of a fader. I like to catch tops and bottoms, and for those who say you can't, I have proof that obviously you can. But here, even right, so a nice bounce from the double, but you can't even rule out 123.14 to even further shake that out. Earlier, I was looking for a possible angle, but this move has indeed buckled lower. Earlier this year, we caught this top here, 1, 2, 3, 4, 5. This whole move is still A, okay? We B, and now you're looking for a C wave. So ideally, the C wave, all right, you look at a measured move is 118, all right? And how I count this is actually, so a nice clean 5-wave decline to the A, okay? and then see that sideways correction. That's key, and that's very typical for these types of B wave moves, right? You get consolidation for a period of time. So you see that there. uh, let's take another extension. Okay, so 161.8 to the top side, break lower. So it's holding a lot of rules to a T. All right, a lot of possible ways. Five wave decline, a nice. I would count this as an ABC correction. We surpassed the A equals C, and always after A equals C, you look at that 161.8 move. Right, that's the extended move, and anything higher would have opened up that 137, but we never got that far. We just made it to the 161, broke down a period of consolidation to meet that other move of a B wave. Also held the 61.8 fib. So to every degree, this is still a sell. So first, yeah, first Liam's looking at this move. Could this lead to the move of 121? Possibly, right? 121 until 118, but if I it could possibly do that. Better sell maybe 126, but in any case, though, both setups validate the shorts, and buys are still for shorts. Okay, we'll see how that indeed does play out. Okay, anybody have any questions about that pair? Okay, does that pair make sense? All right. Does anybody else have any other questions? Yeah, keep the questions coming. I like if ever you guys have want to prepare for the webinars, feel free to do so. I answer every question. I don't think there's any curve other than fundamentals that I can't answer. I could answer fundamentals for those of you all who know my background. I was actually an analyst on Wall for a little bit, specifically at Daily FX. And you know what? Since leaving and really focusing and really keying into I guess the markets, nothing beats just price action. Okay, maybe there are those who can do both. It just my mindset. Fundamentals throw things off way too much because you gain a bias. The only bias I need to gain is price action bias. Steven says, once you got a system with a slight edge in trading, basically comes down to letting your profits run and cut your losses short. Exactly, Steven. That's 110% right. And that's what you know. What a win-loss ratio means nothing because it's just about letting it run. You can have out of 5 trades, you can have 4 bad trades, let's say for 20 pips each, right? 20, 40, 60, 80, right? And then you can have one trade that runs 200 pips. You're profitable. All right. Where people go wrong is, you know what? We are raised in a sort of grade school mentality where you think, okay, 50% or higher is good. It doesn't work here. All right. So I'm 100%. I agree with you. Steve says, "What's your feeling on that?" I 110% agree. It's about doing that. And you know what? You can again, you can have good months where you have a great win-loss ratio. I just don't think it's something you focus on, right? You focus much on that, it could bring down your morale, and even you know what? Emotions in trading even is good too, right? There are those if you lost money, whatever else, you just beat. Let's say, for example, if you follow me and I have 3 bad trades, oh my God, this doesn't work. This is gonna be that month, right? So your whole sort of attitude is shot, right? So not only is it gonna affect you following a signal service, but it's gonna affect your personal trading. or let's say you have a bad week, you're just like, I give up, whatever. Your attitude towards trading always has to be in that right mindset. So it's also letting it run, but having always that upbeat attitude. It's something to even work on. That is how you are every day, right? If you go home and maybe your wife is screaming and yelling, you had a bad day at work, it's gonna affect your trading. So it's always good to keep positive and always look for an outlook. All right. I hope that makes sense. Hope that makes sense. Does everybody sort of understand where I'm coming from on that end? Again, our coaching and our education has taken a little bit longer than we would have liked, but these are all things we plan on really tackling in those features soon. All right, for those of you guys who are interested. All right. Any other questions? And again, this video is being recorded, so feel free to watch it again later. Um, so after it is finished processing, I will release it across the board, and I'll post it in the webinar section. And feel free to talk to me one-on-one if you want to. We could try to set up a time in which we go ahead and we have a one-on-one section, so that bodes well. Just a heads up too, there's another, we do have a sales team as we continue to grow. So he'll be also setting up appointments that you can speak to one of us in case you wanted to. All right, so let's wrap this up. Let's get to some charts, see what the market is doing. That pound dollar is still holding. So we'll see how that trade does indeed pan out. All right. Um, and I'm looking for 162, but for the last quarter, I'll try to look at new highs and see if we could extend a last quarter to 164. So what I may end up doing is maybe going half off at 162 and trailing stops and seeing how far we can extend that last half with the last quarter, maybe 163, and then quarter at 164. So something like that is my exit plan. Give me a couple hours. I don't think the market is going anywhere until Europe, but I will really outline an exit plan, something else we plan on doing, and Chris plans to get that other trading plan to you guys for those of you all who are just looking to be in and out and are getting used to our style. Okay, well, again, thanks guys for joining me. I will see you all Sunday for the weekend webinar, and I'll pull this out later.